Silver has bounced back toward the $89 level today, and after the sharp volatility we've seen in recent sessions, traders across the precious metals market are asking one major question. Is this rebound the beginning of a new breakout move toward $90? Or is this simply a temporary recovery before another wave of selling pressure? The silver market has been extremely active recently, with price swings that have caught the attention of both short-term traders and long-term investors. What we are seeing right now is a market that is trying to stabilize after a dramatic period of volatility. And whenever that happens, the next key levels become extremely important. Earlier in the week, silver experienced a strong decline from higher levels near the mid-90s. That drop shook bullish sentiment and forced many traders to reevaluate their positions. After the market cooled down, buyers slowly started stepping back into the market around the mid-80s. From there, we began to see signs of recovery, and that recovery has now pushed price back toward the $89 region. When a market rebounds like this after a sharp sell-off, it often creates a moment of decision for traders. Some participants believe the correction is over and a new rally is starting, while others see the rebound as an opportunity to sell into strength. Right now, the $90 level is acting as the most important psychological resistance in the silver market. Round numbers like $90 tend to attract a lot of attention because they represent clear milestones. Traders place buy orders, sell orders, and stop losses around these levels, which means that when price approaches them, volatility often increases. If silver can break above 90 and hold that level with strong momentum, the market could open the door for another attempt toward the higher levels we saw earlier. But if price struggles near 90 and sellers step in again, the rebound could stall and the market might return to consolidation. One of the reasons silver is so volatile compared to other precious metals is because it sits at the intersection of two different markets. On one side, silver is a monetary metal, similar to gold, and investors buy it as a store of value during uncertain economic times. On the other side, silver is also an industrial metal used in manufacturing, electronics, and renewable energy technologies. Because of this dual role, silver often reacts to both financial market sentiment and industrial demand trends. In today's market environment, there are several macroeconomic factors influencing the direction of silver prices. One of the most important is the US dollar. Since silver is priced globally in dollars, changes in the value of the dollar have a direct impact on metal prices. When the dollar strengthens, metals often face downward pressure because it takes fewer dollars to purchase the same amount of silver. Conversely, when the dollar weakens, silver tends to benefit as international buyers can purchase the metal more cheaply in their local currencies. Another major factor affecting the silver market is interest rates. Precious metals do not produce yield like bonds or savings accounts. When interest rates rise, investors can earn higher returns from yield-producing assets, which sometimes reduces the appeal of metals. However, when interest rates stabilize or begin to fall, precious metals can become more attractive again because the opportunity cost of holding them decreases. Inflation expectations also play a role in shaping investor behavior. When inflation rises, investors often look for assets that can preserve purchasing power over time. Historically, precious metals have served that purpose. Silver, although more volatile than gold, has often benefited during periods of rising inflation because it combines both investment demand and industrial demand. Another element currently influencing the silver market is global demand for renewable energy technologies. Solar panels use significant amounts of silver due to its excellent electrical conductivity. As governments around the world invest more heavily in renewable energy infrastructure, the demand for silver in solar manufacturing has increased. This structural demand is one of the reasons some analysts remain bullish on silver over the long term. However, short-term price movements are not driven by fundamentals alone. Market sentiment and trader positioning can have a powerful effect on price direction. In recent weeks, we saw speculative interest in silver increase dramatically as prices rallied toward the $94 area. When speculative enthusiasm reaches extreme levels, markets often experience corrections because many traders attempt to lock in profits at the same time. The recent decline from the mid-90s into the 80s appears to have been partly driven by profit-taking and partly by shifts in macroeconomic sentiment. Once price began falling, stop-loss orders from leveraged traders were triggered, accelerating the downward move. This kind of cascade effect is common in futures markets where leverage amplifies price swings. Now that the market has rebounded toward $89, traders are watching closely to see whether buyers have enough strength to challenge the $90 resistance. The behavior of price around this level will likely determine the short-term direction of the market. If silver manages to break above 90 with strong trading volume, it could attract momentum traders who look for breakout opportunities. These traders often buy when a market moves above a well-known resistance level because it signals that demand is overwhelming supply. In that scenario, The next potential targets for silver could be the $92 and $94 levels. On the other hand, if the market fails to break above 90 and begins forming lower highs, it could indicate that sellers are still in control. In that case, silver might move back towards support levels in the mid-80s. The $86 and $84 areas are currently being watched as potential support zones where buyers might step in again. Another important indicator to watch is trading volume. When a breakout occurs with strong volume, it suggests that many market participants are participating in the move, making it more likely to continue. But when price approaches resistance with declining volume, it may indicate that the move is losing momentum. Technical traders are also paying attention to moving averages on the daily chart. Moving averages act as dynamic support and resistance levels that help identify trends. If silver remains above key moving averages, it may signal that the broader uptrend is still intact despite recent volatility. Beyond technical indicators, geopolitical developments can also influence precious metals markets. During periods of global uncertainty, investors often seek safe haven assets like gold and silver. Recent geopolitical tensions have contributed to increased volatility in commodity markets, and any new developments could quickly affect investor sentiment. At the same time, industrial demand continues to play a role in silver's long-term outlook. As technology evolves and industries require more advanced electronic components, silver's unique properties make it difficult to replace in many applications. This underlying demand provides a structural foundation for the market, even when short-term speculation creates volatility. Looking ahead, the next few trading sessions will likely be critical for determining whether silver's rebound has enough strength to turn into a breakout. Traders will be watching how price behaves near $90 and whether buyers can maintain control of the market. If momentum continues building and the market breaks above 90, the narrative could quickly shift from recovery to renewed bullish momentum. But if the rebound stalls, the market may need more time to consolidate before attempting another move higher. For investors and traders alike, the key lesson from the recent volatility in silver is the importance of managing risk and maintaining perspective. Markets move in cycles, and sharp corrections are often part of larger trends. Understanding the drivers behind those movements helps traders make more informed decisions rather than reacting emotionally to price swings. Right now, the silver market is at a crossroads. The rebound toward $89 suggests that buyers are still active, but the $90 resistance remains the level that must be broken to confirm a stronger recovery. Whether the market breaks out or pulls back from here will depend on a combination of technical momentum, macroeconomic conditions, and investor sentiment. In the coming days, traders will be closely monitoring the behavior of the dollar, interest rates, and global economic data. These factors will continue shaping the environment in which precious metals trade. For now, the silver market remains one of the most dynamic and closely watched sectors in commodities. The rebound toward $89 has brought renewed attention to the possibility of a breakout, and the next move could set the tone for the rest of the month. The question remains, will silver push through $90 and resume its upward momentum, or will resistance prove too strong and force the market back into consolidation? As always in financial markets, the answer will come from price itself. And that is why traders everywhere are watching the $90 level more closely than ever.